Hey Bulls and Bears, how we doing? Today we're going to get into the housing market. I'm actually outside right now and it is raining. And when it rains in California, I get really happy. Let me do the sidewalk here. Let me show you guys. Right? Not much. Not much, but any rain for California is a good rain. All right, let's get into the housing market. Home sellers are getting burned. They are listing their home, but they're listing it for prices that are too high. And if you're behind the eight ball on this, if you're behind the curve, you're going to ride the market all the way down. We're going to show you some examples. We're going to talk about inventory and where we're headed at in the housing market. Also, we're going to show you which cities are having the biggest price drops. Let's go ahead and get into it right now. All right, everybody, let's start right here. This is data right out of the Federal Reserve, and this is the home ownership rate. And why is this important? This tells us the balance between investors and people buying a home just to live in, right? Owner-occupied homes. So we see, of course, the big run up in 2020 with that recession, a very brief recession, but with the health crisis, of course, everybody left the office. People were afraid to go into the office in some cases, or their offices closed, and they worked at home, and a surge in home buying as people left the big cities and moved to different smaller towns in many cases, places like Boise, Idaho, and other smaller cities, and leaving the coastal cities especially. And of course, the big run up in home ownership. But then what happened? People started selling those homes because they panicked, they bought because they were working at home. Okay, then it started leveling out a little bit through 2021. But here recently, as of the second quarter, we're still waiting for the third quarter numbers, home ownership rate is increasing. What does that tell us? That tells us that investors are buying less now and people are buying more. People that just want to live in a home are buying more. That's what it tells us. Now, it's not a very big move because if you go to a maximum chart here, we see that the home ownership rate technically didn't recover to where it was in 2005, 2006 before the last housing bubble went bust. Before this housing bubble is finished, I expect this home ownership rate to plunge below where it did as the last housing bubble was plunging. And in 2016, it bottomed out at about 63% of people owning their homes. I think it's going to drop down to 60% when this one's all done. And therefore, the people with cash, the big money, the investors, or just people that are waiting on the sidelines with cash or nice down payments will be the ones to come in and scoop up the deals when this housing bubble hits bottom. And bottom could be 2 to 3 years away, the way things are looking right now for this current housing bubble. Next, let's look at months of supply of homes on the market. You would expect it to jump up and just keep going, but it didn't happen. We see the big jump up there in July, and people thought that this housing market was going to completely collapse. But what happened? Month of supply actually dropped back down. So yes, there's still a limited supply of homes on the market. Some home sellers are sitting this market out because they know that if they go live somewhere else or they have to rent after selling their home, prices are outrageous even for rents. And even things like the cost of moving, renting a moving truck, the fuel, everything's so expensive. A lot of home sellers are staying put. Now, some home sellers are forced to sell because they're in a tight financial spot. They're in a pinch, or some would call it a cash crunch. There's millions of people out there that bought their homes in the last couple years, and they're going through really, really tough times right now, especially watching the prices drop and watching their home equity vanish. Take a look at a couple of listings here in San Diego. Let's look at this one right here, Edouard Avenue, San Diego, 92123 zip code. And this is listed for $825,000. But let's take a look at the price history on this one. And they listed this originally back in July for $972,000, folks. Every few weeks they cut it. $972,000, $899,000, $875,000, $850,000. And they're riding this market down. Now they cut it down to $825,000. So now they're below from where they started. Actually, they're about $140,000 below where they started. All right, so back to this. So this is a massive price cut. Obviously, we see now that this seller didn't price their home aggressively enough. They should have been at the $825 mark back in July. It probably would have sold, but they're riding the market down, and now they're going to keep going. This could go down to the 700s, even the 600s, unless they get more aggressive on the price cut. And with mortgage rates now 7% and going up, going higher, we've got another Fed rate hike in the cards. You've really got to be aggressive, especially in an overpriced market like San Diego. You got to cut those prices quickly. Next, let's look at this listing out in Lakeside. I was out here, last week at the car dealership, and this is Emmis Road there. $629,000 is the current listing price, but look at the history on this one, and this is definitely a sad story for this seller. So first, let's go back all the way to when this person that's selling it bought it. They bought it in June 2021 for $636,000. But if you look, the listing price was $599,000. So mid-2021, the market was on fire. Bidding wars, people going over the asking price. And that's what they did on this home. $599,000 was the listing price. They went over asking. They went $636,000. So $37,000 over the asking price. They probably had bidding wars, and the buyer's agent was probably telling them to be aggressive on their offer. And that's what they did. They got it for $636,000. Fast forward to today, it looks like they got into a bit of a crunch because they're already selling this home. They listed it for $695,000 in August. Price cut $689,000. A few weeks later, price cut $659,000. Most recently, October 6th, $629,000, folks. So now they are losing money on this deal. They paid $636,000 just over a year ago. And now they're listing it as a loss. And who knows? They may have to cut their price even more. They could be taking $100,000, $150,000, a $200,000 loss on this home. That's what happens when you buy a home during a mania, during a housing bubble frenzy, when there's bidding wars, when interest rates, when mortgage rates are at rock bottom. Somebody is getting burned. We don't know the story. Maybe there was a job loss or something like that. Or maybe the cost of living caught up with them and they couldn't keep up with the mortgage payment. And now that is what's happening, folks. And this is going to spread as prices continue to soften. And this is going to happen to millions of people. Millions will be underwater. And people that bought only a year ago, even 2 years ago, are going to be underwater very, very quickly, especially in expensive markets. Now, I've got a map all loaded up here for you. And let's look at the top right here. And we see the key tells us that the red and the dark red is the biggest price drops. Blue is where prices are still increasing from May of this year through August of this year. So just during these 3 months, look at these massive price drops, especially out here, out west. We see San Diego County down 5.6%, Los Angeles County down 6%. The Bay Area, big price cuts up there, price drops, 10.6%, 8.2% Santa Cruz, 4.4% Stockton, 7.8% Berkeley, Sacramento 6%. We go up the coast here. Bend, Oregon 5.3%. Portland, Oregon 4.7%. Up to Seattle 3.8%. Out to Boise 5.3%. Over to Salt Lake City 7%. Ouch. Phoenix, Arizona 4.4%. Over here to Denver 4.3%. Wow, what's going on out west here? Austin, Texas down 7.4%. Massive. But as you can see, it's a mix because as people left the coast, they went inland, and a lot of these cities are still seeing price appreciation even this year as mortgage rates are increased. And look at the blue in Florida. A lot of people moved down to Florida, even with the hurricanes down there. We've got Ocala up 5%, Gainesville up 3%. Of course, Miami, Fort Lauderdale up 4%. And this goes to show you that real estate is local. Prices dropping in some areas, prices still increasing in others. What an interesting and wild housing market this is. Now let's jump over and take a look at some data here. This is the number of listings, or the percentage of listings with price drops. And we see 2020, 2021 kind of fluctuated between 2 and 3.5%, right around there. Now we see this year spiking and no signs of slowing down, up to 7.9%, folks. This is going to keep going. Right now there are some cities that are seeing half of their listings with price cuts. Places like Boise, Idaho, Austin, Texas is very heavy on the price cuts also. Overheated markets equals desperate sellers when the market turns, and that's what is happening. The market's turning, and who knows where this is going to hit rock bottom. But without a drastic reversal on the mortgage rates, This is going to keep dropping, and if rates stay where they are or go higher, we likely won't see a bottom for 2 to 3 years. We could be talking about late 2024 to late 2025 in that time range if I had to put an estimate on it before this market hit bottom. All right, folks, please let me know what you think down in comments about this housing market. These sellers, some of them are not being aggressive enough. Thanks everybody for watching. Please thumbs up, like this video, share this video if you like what we talk about. Come back for more updates. Bye for now, everybody. Peace.